G'day, Binanceans, and welcome to this week's Binance Beach. I'm joined by Maddie from Crypto Tax Made Easy, and we're here to talk about who won and who lost in the financial year 23-24. Matt's going to give us some insights into what he saw from traders' tax returns and preparing hundreds of Aussie tax returns for that financial year. Given we're right towards the tax deadline, I thought this would be an interesting episode. Welcome, Maddie. Thanks so much for coming back on the show.
Yeah, thanks for having me again. I'm excited that you're at episode 41 and still kicking.
Still kicking. Speaking of Binance Beach, the waves were pretty cooking at Binance Beach on the weekend. Did you get amongst the brine?
Oh, yeah. I was out there at least twice a day. US tax deadline just passed, and I needed a good refresh. And there's nothing better than getting out there and getting a few waves to do that.
100%. I did too. It was pumping, and it was great to see the east coast of Australia light up. I surfed my local bigger than I have in quite a while, so that was pretty challenging, but also really fun. So, fingers crossed we get a few more waves before the end of the surf season, and we head into winter when it's cold. But before we kick off, do you want to give us a brief introduction of who Crypto Tax Made Easy is and why you're qualified to speak on crypto tax secrets?
Yeah, so crypto tax made easy. We essentially do what everybody wishes crypto tax software would do. You give us your wallet addresses and your exchange accounts. We get that into a crypto tax software, and then we make sure that all the transactions are properly categorized and that your balances reconcile so that when you do pull the reports out of the tax software, that you can be certain that those are far more accurate than if you just uploaded everything to the tax software and said, that might be all right, and then sent it off to the accountant. So we kind of do the magic in between because most crypto tax software, it just isn't accurate out of the gate. It requires a lot of human manual processing to get right, and we offload that for our clients.
So, through that process, like I said, we're nearly at the tax deadline for financial year 23-24. Was that a good year overall for Aussie crypto traders, or was it a bit of a negative one?
It was actually pretty good. 23, 24 was an interesting year because 23 was relatively boring. So people didn't have a lot of activity at the beginning of the year, but they were starting to ramp up. And because we were still kind of just coming out of that bear market, things have kind of been up only since 2023. And so anybody who started ramping up their trading activity in that year and didn't overtrade actually tended to make out pretty well by the end of the year. Because if you remember, kind of mid 2024, that's when things had pretty much started heating up. We had ETFs were already approved and out there, and finally the like negative flows out of the Bitcoin ETF had kind of stopped, and it finally allowed price action to go up. So we had a lot of people who they didn't make as large a profit. Like I saw huge profits in kind of like the 2024 calendar year for like US and some of those clients. The magnitude of the wins were huge, but the magnitude of the losses was as well. I'd say 23, 24 Australia, it was either people weren't very active at all, and so there was very little activity, very little capital gains being had, or some people who just started ramping up their activity, they did well. You know, they ended up posting profits. The magnitude of it wasn't necessarily massive, but yeah, overall, it was a pretty good year for most Aussie crypto traders.
Yeah, I mean, I think that was a pretty consistent grind upwards for Bitcoin, particularly post ETF approval. I mean,
Yeah.
from the bottom of like 22, we ran from about 16 to 20K up to that 40, and then kind of had that like 20K, 40K, 60K, 80K level. And then obviously we cracked that 100K level earlier this year. What were the key themes that you kind of picked out of your clients' tax returns, and what were the strategies that stood out to you for people who did really well?
Yeah, the really interesting thing about crypto is that there's so many ways to make money. There's equally as many ways to lose money, but so many ways to make money. And there's no one size fits all trading strategy that I've seen that leads to profits for people. The only consistent principle is you have to take profits. If anybody who is paying a big tax bill because they actually realize profits, the only common theme is that they took money off the table. And I think a lot of people have seen a lot of paper profits in crypto. They've seen a lot of screenshots of phantom wallets or Binance accounts being run up, but that's unrealized until you actually trade that out for a stable coin or take it out to your bank. So that's the only common thing I've seen. And then I've seen people run the gamut. Like I've had people who, no matter what you think about it, had done industrial airdrop farming. And 23, 24 was a really good year for airdrops. And so there were some people who would have hundreds, if not thousands of wallets that they were running on some of these layer two blockchains that were doing airdrop campaigns or on some of these apps that had really good airdrop potential, and they ended up cleaning up. Whatever you think about that Sybil farming, as some people call it, whatever, but that's how somebody made money. I've seen people post 6, 7 figures plus that they're getting airdropped from these campaigns. And then on the other side, you might have somebody who just happened to buy one coin early. We had, a lot of people who, let's say, bought WIF early, or they had held Bonk because Solana was obviously huge. They had held that from earlier on. And as soon as that took a bit of a parabolic rise, as they got centralized exchange listings or as they just started getting more attention and people started scaling out of positions, that we saw that doing really well. And those people might not have had a ton of transactions compared to like these giant industrial airdrop farming operations where you have thousands of transactions on hundreds, if not thousands of wallets. So you have this huge range of how people made money. But yeah, the main thing is the only way that you truly make money is if you put it back in your pocket, whether that's taking it to stables, keeping it on the side, or bringing it back to AUD.
What about the mid curvers? The most interesting part of that market rise, I think, was Bitcoin's grind up,
Yeah.
Solana ecosystem popping off. But as maybe a bit of a mid curve guy myself, a lot of these older DeFi protocols didn't see a lot of price action. There was a lot of really average price action from a lot of tokens, a lot of things that were even potentially hyped. And then you had that kind of airdrop meta of high FDV, high float, high initial token valuations that then kind of plummeted or created once they hit the open market. So, how did the mid curve guys go? If you weren't lucky enough to nail, a moonshot on a meme coin, or you didn't sit predominantly in Bitcoin, how did you go that year?
Yeah, so for a lot of those people, because for us, we're essentially calculating the capital gains and the income that they've received from different crypto activities. A lot of the people who are more mid curve going towards alts or utility tokens tended not to have many taxable events because you didn't necessarily see the huge meteoric rise that they were probably looking for to hit some of their take profit points. So you don't have a CGT event until you actually sell your crypto for another crypto or AUD. And so a lot of the kind of mid curve in 23, 24, because we didn't see a lot of movement in alts or some of the more utility coins the way that some people expected, I think a lot of people were just holding on, hoping that later in the cycle, when an alt season hopefully arose, that's when maybe they would take profits. And just kind of jumping ahead a bit, I'm already seeing a lot of people who are looking at some of those bags, seeing that they might even be in a loss at this point, and they're considering doing some tax loss harvesting and just cutting those positions and kind of cutting their losses and taking the consolation prize of a little bit of a tax write-off.
You had one of the best lines amidst the market turmoil a couple of weeks ago. I saw it on your Twitter, and you said, "Wow, Trump has presented us with some generational tax loss harvesting opportunities." I thought that was brilliant. That made me
Yeah.
laugh pretty hard. Did you see that as a key theme as well? Were a lot of users tax loss harvesting with that significant drawdowns that we had, or not really?
Yeah, so our US client base, since their tax year is the calendar year, a lot of them unfortunately got in a situation where 2024 was a highly profitable year, and a lot of them didn't set aside enough money to pay their tax liability. They ended up full porting back into the market in 2025. They might have got rinsed and lost a good deal of that. And unfortunately, not that many people took full advantage of tax loss harvesting opportunities because most of their positions were in a gain by the end of 2024 with all the hype around the Trump election win and the impending inauguration and what that might mean for the markets. Whereas for us in Australia, having the fiscal year run kind of mid-year to mid-year, um, with all of the downward price action that we've experienced with uncertainty due to the tariffs and some other things that have come out of the Trump administration, for us we're lucky because our bags are down. And so if we had some huge profits that we took, let's say towards the end of the year into January for the 24-25 tax year, and now we have some losses, well, we're lucky because we can actually sell some of those positions at the loss, realize the loss, reduce the overall gain, and not get hurt as badly as some of the people in like the US and Canada and jurisdictions where their tax year is the calendar year. So we certainly got lucky from that perspective. And I do have, like, I'd say almost every single one of our Australian clients is interested in getting an end of year reconciliation so that they can properly assess which of my positions are in a loss that I might want to cut in order to realize the loss and reduce my overall capital gains for 24-25 before the financial year wraps up.
Did you see many clients get caught out by selling or trading at the top, realizing a profit in dollar denominated terms, but not taking that profit in dollar denominated terms, and then seeing potentially like a pullback or a bit of a crater on that token, and then being up for a large tax liability without necessarily having the funds to cover it? Is that something that you see a lot, or is that
All
a
the
rare
time.
case
Yeah,
all the
we see
time?
that all the time. Yeah, a lot of people don't realize that. To be honest, I saw this more when a lot of meme coin activity was happening on Ethereum mainnet. For a lot of people,
Mm,
and NFTs, like they felt as
mm,
though it wasn't worth the gas fee to sell the position. So they might have, bought a meme coin, they might have chucked 10 ETH into it, and then it might have rugged and gone down 99%. And they're like, well, gas fees are going to eat up more than what I'll return out of that position. So then they just held the dust in their wallet and they never realized that loss. So they might have rotated from a win, chucked 10 ETH into a complete loser, and then never realized that loss. So now they're liable for, let's say, the 10 ETH profit on the first position. And now instead of realizing that 10 ETH loss by selling the NFT or the meme coin, then they ended up in a hairy situation. I haven't seen it as much anymore now that a lot of the kind of meme coin activity has moved on to Solana, and because like gas fees on ETH mainnet and the L2s have dropped so much that that's not really a consideration people have, where they're like, oh no, like the gas fee is going to be more than I'll get for selling the token, so there's no point in doing it. So
mm,
that's something that was a huge issue in the past that I was seeing. Now it only really happens when people just forget. They're kind of spraying and praying. I see a lot of people who are, taking like small positions in a huge number of tokens, and they might have like 80% of those tokens go to dust, and they end up with moon bags of dust that go nowhere, but they haven't actually mined the gold out of that, which is the tax losses, so the capital losses that can then be
mm,
used to offset the capital gains. So generally, it's just when people aren't educated about crypto taxes and that unrealized losses don't offset realized gains, and then the tax year finishes and there's then nothing you can do to push those losses backwards. That tends to be where I see
mm,
people in that hairy situation now. It's less common because before it was people being like, it's not worth selling it. The gas is more than the returns, and people just not being educated and forgetting. So there was far more people in the past that this was kind of a dagger to.
Yeah, that makes sense. And hey, maybe you're doing a good job of educating more people. I mean, I've said it before, but tax content is some of our most demanded content. People are trying to actively educate themselves about this side of the space because
Mm,
making profits is hard, but keeping profits can be just as important, right? And so
big
there's
time.
definitely a lot of appetite for learning. And maybe people are improving, particularly because I think that cohort of 23, 24 was fairly crypto native, right? Like there was a fair bit of commentary around like there's new flows from the ETFs and there's new flow from institutions, but a lot of the retail capital is just kind of cycling through, particularly on Solana. I feel like I remember that commentary being a pretty big part of that part of the cycle and that broader uptrend that we had. Is that something that you saw as well? Are you seeing a lot of new people to crypto for the 23-24 year, or is it more of our established crypto degen traders, coming back and trying to take advantage of a market upswing after, building some experience or getting some trading experience up during 2020, 2021, 2022?
Yeah, I'd say that the majority of our clients, new clients this year, are experienced traders who probably lost money in kind of 21, 22, or 22, 23. And so they figured, well, I lost money. So it's not really worth having a professional on, handle my crypto tax. They, in many cases just didn't report because they're like, well, I had a loss. If the ATO comes looking, all they're going to see is a negative P&L. So I'm not going to, I'm not going to get in trouble for that. No big deal. But then all of a sudden, with the market upswing, and suddenly they're in profit and they're starting to actually cash that out into AUD and put that in their bank, they realize I don't want to have to look over my shoulder, and they're having multi-year lookbacks. And that was the majority of our clients, not just in Australia but globally, for kind of like the 23, 24, or 24 calendar year, was existing players who wanted either a historical cleanup or wanted to finally get square now that they'd made some profits in 24. I didn't see a whole lot of people who their first crypto activity was in 2024, but there were a lot of people who got burned in previous cycles who actually returned to the trenches, so to speak. And you would see
Mm,
this huge gap. It was kind of funny. I'd have some people who would come and they'd be like, I need, like 21, 22, skip 22, 23, and then I need 23, 24. And you'd look and they'd have
mm.
like a few, like you could count on one hand how many transactions they had in like 22, 23. Um, so yeah, there was kind of that period where interest was super low. And I think if anything, we in 23, 24 specifically attracted more people back who had left in the past. So, that's pretty cool. But now I am starting to see some new entrants, specifically like for 24, 25.
Yeah, interesting. And one of the pieces of commentary I've seen a lot of lately, particularly from local Aussie coals and more broadly, has been about the difference between rotating profits into stables or fiat and rotating profits into Bitcoin. Can you share any insights on whether one or the other is more predominant, whether more people are rotating into stables and cashing out for fiat, or whether more people take profit, rotate into Bitcoin, and then have to cover that tax liability from some other income stream or income source?
Yeah, it's all over the board. Um, I think it just comes down to what people's personal strategies are. I'd say the vast majority, if we're talking about like pure number of clients, I'd say the vast majority, it's they're taking it to stables or fiat, because for most of them it's somewhat life changing and they're going to change their life with it. The people who are actually smart enough to take profits and take it out, they're actually, it's as if they had a purpose for it. I think in a way,
Mm,
it's like the reason that they cashed it out is because they knew like, well, if I'm gonna make 10x on my Bitcoin and it's gonna hit, this amount, I'm gonna cash it out and I'm gonna, put a deposit on a house or something like that.
Mm.
And because they had a reason for the profits, they actually took them. So I think there's something to that, like having a reason that you're
Mm.
in the trenches and trading in the first place. And I think that allows people to be more disciplined about when they take profits and actually putting that in the bank. Whereas there are some other people who are existing whales, and some of them, their strategy has just been to grow their stack of Bitcoin, Ethereum, or Solana. A number of like, especially Ethereum whales that we've worked with, they sell their stack straight to Ethereum, and then they're either putting it into like something where they can get some yield, whether it's running a validator or going into farming certain airdrops with size. And yeah, then we have some people who it's just like they're Bitcoin believers, and everything that they do is to get more Bitcoin, and they take profits into that. So it really is what's your flavor. But yeah, I'd say the vast majority in terms of number of clients, it's into stables, into AUD or fiat, and cashing it out if they made profits. But I wouldn't say the majority of people make profits necessarily.
Yeah, fascinating. If you had to sum it up in terms of who made money and who lost money that financial year, how would you give us a summary of who made money and who lost money?
Yeah, I think that the main things, and people might not like to hear it, but people who were just early and had conviction when the market was down. It's like the people who continued to DCA in, they were in crypto for a while. They believed that at some point the trajectory of this asset class is going to go up, and they just kept buying even when it seemed stupid to buy. Like those people, they're winners. And it's hard to say now because it's like we're probably mid bull run, if not like towards the end of one. So that might not inform strategy for people currently, but hopefully it gets the bug in their head. Like if you believe in this space, when eventually we do hit that bear, that's an opportunity. Outside of that, man, there's definitely some people who you look at their you look at their trading activity and you're like, man, this person doesn't miss. They must have some inside info because there's no way a human is this lucky and this early with that much size all the time. Which is probably another thing people don't want to
Mm.
hear is that there's an edge and potentially some insiders that are I don't want to say manipulating markets, but they have an edge that the average person doesn't. And then outside of that, again, it's just people who are really disciplined about profit taking. You'd be amazed at how many people I've seen that just absolutely round tripped generational wealth, and it just ended up being a screenshot that they took at some point in time, but never
Mm.
actually profits that went into their pocket. So I think that's the one thing that every single person listening to can garner some insight from is it's just about being disciplined with your profit taking. And I found it funny. I mentioned uh, on Twitter that pretty much some of the most profitable traders of the 2024 calendar year that I saw took profits in November and put it into stables and didn't redeploy into the market. And I had some people trolling me like, that's so obvious. November is when Trump got elected and every market pumped. Like, of course, that's, when people were making the most profit. I'm like, man, I've seen thousands of people's trading activity, and you'd be amazed how many people don't realize the profits. That's the
Mm.
key people are missing. Like, yeah, of course, that's a good month, so more people are going to be in profit, and anybody that sells that month is likely to be in profit because every asset's at all-time highs. But most people don't have
Mm.
the discipline to sell when the market's pumping. If anything, I've seen people redeploy at higher prices because they think we're going higher from here, and just maybe hold on and lack the discipline because they're like, oh, we hit my take profit number, but we're going higher, and I'll feel FOMO if I sell now.
Mm.
It's really just discipline, man. And sometimes it's funny. I'm saying it as much for myself as anybody because I have round tripped many a time, and I'm just reminding myself to be disciplined. When I hit those take profit numbers, take profit.
Yeah. I know it's a crazy market and it moves so fast. And in November too, like if you sold in November, you probably missed that last leg up, that last 10 to 20% to timing that top of the market on basically Jan 19, Jan 20. But I guess maybe that speaks to what that winning strategy was for that period, which was to recognize that the market was hot, recognize that the consensus take was we're going higher, and to bag some profits at that point when you knew you could take them and you would miss that last leg up, but you also would have missed that significant draw back down, that kind of 30 or 40% draw down from 109 that Bitcoin's had down to 75. And, at that point, potentially that was a great place to redeploy if you were able to run that strategy. But I mean, geez, you can just replay it in your head 100 times and hypothecate what you could have done, should have done, would have done, right? It's hard not to torture yourself with it in retrospect.
Big time.
Any key expert tax takeaways from that tax season? Any key tips that our users can take away?
Yeah, I think I mentioned it in terms of just profit taking, but when it comes to tax, like where we're at currently, we're approaching the end of the financial year. So I think probably the most relevant and timely tip is if you haven't already, set up a crypto tax software and pulled all of your wallets and exchange data into it, and either had experts like us review it or personally gone in and categorize your transactions. Now would be a really good time to do that. Gives you a bit of time to be able to see, all right, what is the current unrealized gains or losses on all the positions that I have open, and which of these might I want to cut to realize the loss and to reduce my taxes for the 24-25 tax year. Because after June 30th, there is nothing that you can do to reduce your 24-25 taxes. The tax year is closed. You can't push losses backwards, unfortunately, in Australia. And so any action that you want to take to reduce your capital gains in the 24-25 tax year has to happen within the next 2 months, pretty much. So the
Mm.
best thing to do now is to actually get accurate records about your current positions, the cost basis that you have on them, the current values. And then from there, you'll be able to actually strategize and figure out what can I do between now and June 30th to be able to make sure that I'm paying the least amount of tax possible when my taxes are due.
Makes sense. And with the market drawdown that we've had to, like you said, there are definitely some opportunities to take losses on some projects that might be low conviction. So I think that's some good takeaways for users there. Anything final to leave our users with before we wrap up and let you get back to the Binance Beach for the weekend?
Yeah, no, all good. I think if they want to check out more of us, I'm planning on getting back into the Twitter or the X game. I've during tax season certainly neglected that account, but I'm already starting to get back on the threads. So hopefully some more. I'm also planning on really harping on some of the Australian tax stuff as we come to the end of the tax year. So should be some more educational content for them there if they want to find more.
Love it. Definitely throw Matty a follow. You'll learn a heap from his Twitter feed, and hopefully, it'll help you keep a few more of those profits that you make trading on Binance or wherever you do your crypto trading. Hey, thanks so much for joining us, mate. A great episode again, and we'll have you back very soon.
I hope so. Always good chatting to you, brother.
As always, Binansians, please make sure to like and subscribe, and please let us know who else you'd love to see on the show moving forward. Until then, have a fantastic week. We'll chat with you soon, guys. Bye.
See ya.
Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance.